Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring. Today is Friday, April 8th, 2020. We just finished up a new week, and in this podcast today, what we're going to do is we're going to take a look at all my trades that I did last week. We're going to talk about when I entered them, why I entered them, how I'm going to manage them going forward, either to the upside or to the downside. I always trade all different time frames if possible. So I have daily trades that I'm going to show you. I have weekly trades that I'm going to show you, and I'm going to show you the monthly trades as well. So thank you all for coming. I appreciate you being here. For those of you that don't know, I do this podcast once a week. Just go through, review the trades of last week, and then we're going to go through and also take a look through my watch list. We're going to go down through each stock one by one, take a look. I will mark the ones that look interesting and that look like they have potential setups for next week. So hope you had a good trading week, everyone. Had a little bit of a pullback after a large rally up this week, but was a great week, and grateful for that. And I'm grateful that you're here and that you're spending the time, and I hope that this is helping you. So real quick, again, first thing we're going to do is we're going to run the U.S. legal disclaimer. Secondly, we're going to come back, take a look at my current positions. Again, talk about when I bought them, why I bought them, how I'm going to manage them going forward on all the different time frames. After that, we're going to spend a little bit of time. We're going to talk about trader psychology. It is the most important skill. I was just talking with my trading partner, Ava, today about it. I mean, yeah, at first, learning to trade may be a little difficult just because it's kind of it's a different language. But once you learn, it's not that hard. The tough part is creating that plan, following the plan, following through on the plan. And that's really what it takes, everyone, to be a long-term profitable trader. You have to use good trading principles, good risk to reward ratios, look for supports on multiple levels. You have to do that, but emotions get in the way. Emotions get amplified in this when we're making money, when we're losing money. It's not just when we're running bad and having a drawdown. It's also when we're doing well. You start to feel bulletproof. And there are times where, you just feel like, oh, I'm never going to lose another penny again. And then there are times where you feel like I'm never going to make another penny again. And trust me, in the 25 years that I've been trading, I have been through those opposing emotions many, many times. So we are going to talk about trader psychology. Hopefully that will be helpful. After that, my good friend Frank, the trading poet, I always like to highlight one of his poems. He writes a poem every day about trading, about what's going on in the market. So I'll be sharing that with you. We'll read one of his poems. Always fun. After that, we are going to, like I mentioned before, we're going to go down through my entire stock watch list. I'm going to go through, talk about what I'm looking for. Usually is going to have to go higher or lower before I can get interested in the trade. But hopefully by me doing this, going through, gives you an idea kind of how I think about trades, what I'm looking for. But yeah, that's the irony. Stocks either have to go up higher or down lower for me to get interested in buying them. It's very rare that just at the moment it's perfect. And probably a good time to talk about patience, everyone. Let the trade come to you. Warren Buffett said there's no 3 strikes rule in the market, meaning you can stand over that plate, wait for that perfect pitch to come before you take a trade. And if you do that, you're going to be more successful trader than if you just kind of try to force the trade. So I'll go down through the watch list. I'll mark and flag different symbols that look good to me going forward for potentially for next week. Doesn't mean I'm going to buy all of them, but I'm going to go through, take a look, and hopefully come up with a nice little list that I can look for next week. Okay. All right. So let's get the show on the road. I've got to run the U.S. legal disclaimer first, and I'll be back in 40 seconds. Thanks. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast. here, and here. Thank you so much. All right, everybody, let's get started. Take a look. So first on deck on my daily trades. By the way, I'm going to show you daily trades. I'm going to show you weekly trades. And I'm going to show you monthly trades. One of the reasons I believe for my success all these years trading is that I like to trade multiple time frames. By doing so, you kind of spread the risk out over multiple time frames. Sometimes daily swing trades just don't work. You know, you get in, you get stopped out. You get in, you get stopped out. But if you took that same trade on the weekly, it gives you a little bit more breathing room, although you have smaller amount of shares as well, but it gives you more breathing room. And it's very rare that a monthly trade, a weekly trade, and daily trades all do horrible. It really is. And that's why I like to find the midpoint of the different time frames. And while we're talking about it, in addition to trading many different time frames, or as many different time frames as possible, I also like to trade as many different strategies as possible. I know a lot of people say get good at one strategy, use it, and that's totally fine. But you know, for me, the market changes a lot, right? We have trends, we have chops, we're going down. So I have different approaches for the different types of markets. So I always have a tool that I can use in any market. So in addition to the trading multiple time frames, I like to trade multiple strategies as well. And in addition to that, I like to trade multiple types of markets, not just equities. I like to get outside of equities like gold, bonds, silver, oil, rough rice, you know. So those are the three principles for me in my trading. Trade as many different time frames as possible, trade as many different type of markets as possible, and trade as many different type of strategies as possible, so you get a good cross section and it evens things out. So let's start off with Morgan Stanley. So I did buy Morgan Stanley yesterday, Thursday, on the 7th of April. Nice confluence of signals here. We went under 30, over 30. That's the main driving signal of this particular setup. We also rejected the negative third ATR channel. The negative third ATR channel, 92% of prices, when they come down to it, stop going down, at least go sideways or bounce back up. So 92% is pretty good. There's the 8% that can get away from you. So, you know, it's not a holy grail, but it's just another indicator that I use. So the multiple signals that I used for Morgan Stanley, again, was the under 30 RSI, over 30 RSI, intraday rejection. We rejected the negative third ATR channel, and we also undercut the low of the previous range. See, this is over here, way over here. On that day, we tested it. We went below it, rallied back up. So it's a false breakout to the downside from the previous range. We have an under 30, over 30 as our trigger. We have an intraday rejection of the negative third ATR channel, and that is why I took the trade. So far, so good. Bought it yesterday at, if I can get that to work, 83.10. It's 84.08, and currently it is up 1.2%. You see the purple line down here? The purple line is my emergency stop. There's a point in any trade where you just have to say, hey, enough is enough. I have to get out of this right now, and it's based upon a dollar amount. I have some new trades. I'll go through all of that for you, but just in case you're wondering, what's that purple line down there? That's 2 ATRs away from my entry. That's my entry minus 2 ATRs. I'll do the math on another example, but if it ever gets down here, I'm going to get out, usually on an end of day trader, end of bar trader. I wait for the bar to close before I make my decisions, but I could have a huge bar down. I can't wait till the close of the market if it goes down a significant amount. So that is what my 2 ATR emergency stop is down there. My end of day stop is going to be a close below the 30 RSI. I bought it under 30, over 30. So therefore, if it closes below 30, that's going to be my end of day stop. So 2 stops always: emergency stop, end of day stop. Emergency stop, you're only going to hit about 5% of the time. End of day stop, you're going to hit about 95% of the time, but it's going to be a smaller amount. orange line up here, this is my trailing stop level. Once I get up to the orange line, which is 1.5 ATRs from my entry, then I go into trailing stop mode, right? And then my trailing stop mode becomes different. If I get out, I have a close below the previous day's low, I'll get out of half. But suffice it to say, entry point on this, the signals were under 30, over 30, under the negative third ATR channel, false breakout to the downside from the previous range, set my maximum allowed loss, have my end of day stop, which is a close below 30 RSI, because that's why I took the trade, because it went back over 30. So if it untriggers, goes under 30, then I'm just out of the trade, and then my trailing stop level up here. So far, this particular trade up 1.20%. one day. Very happy with that. I see over here I have earnings, and by the way, I never hold through earnings. It's just not something that I do. I consider it gambling, and if you want to gamble and get a free room and a buffet and all that kind of stuff, go to Las Vegas. But the market does not pay you anything for gambling, and just holding through earnings and gambling on what the results are going to be is just that. It's just gambling. So I will exit this trade regardless before the 14th of April, regardless of the win or the loss. Okay, gold. Gold is a entry that I took today. I like this setup a lot, everyone. We have a 520 crossover. That's the signal. And the little blue line here is the 5. The deeper blue line here is the 20. Well, it had a 520 crossover. You can see up here the value on the 5 EMA is 180.48. The value of the 20 is 180.42. So it had a nice crossover. So that does back test well. In addition, it happens inside the value zone. This is the 1 ATR channel. This is the negative 1 ATR channel. Anywhere in this region right here is called the value zone. And I love to take crossovers in the value zone while you have sideways motion, and it backtests well as well. So let me show you over here. This is etfreplay.com. I'm using this by permission. Have here on the 520 exponential crossover on GLD. And if I backtest this, you can see it does backtest positively, 128.7%. Not as good as buy and hold, 323.50. But on the other hand, the drawdown is much, much less than buy and hold. And people don't they don't give enough attention to the drawdowns, because drawdowns are what messes everyone up. So you can see when you have a 520 crossover, if you backtest it historically, it does work well. And that is why I bought it. So, just want to talk a little bit about position size, everyone. In this example, let's just assume that I have a $50,000 account, okay? Just for this example. So $50,000 account, if I have $50,000, a good rule of thumb is risking 1% of your capital on any one trade. That's your maximum allowed loss. So if I have $50,000 times 1%, it's going to be $500, right? So $500 is going to be my maximum allowed loss. I'm going to take that maximum allowed loss divided by the value of the 2 ATR. The 2 ATR over here is 4.43. So $500 divided by 4.43 is going to tell me to buy 112.8 shares. So I'm going to buy 113 shares. So why is that important? It's important because if the volatility was higher, it would tell me to buy fewer shares. If the volatility is lower, it's going to tell me to buy more shares. Volatility is pretty sideways motion here, so it's telling me to buy quite a few shares, but that's okay. So I bought here 181.45. I did the math. I took my maximum allowed loss. Again, in this case scenario, $50,000, 1% of that is $500. $500 divided by 4.43, which is the 2 ATR, is telling me to buy 112.86 shares, so 13 shares. Now, if I have 113 shares and I go down to my maximum allowed loss, which is 4.43, how much am I going to lose? $500, right? Because we just did the math. We did 500 divided by 4.43. So if it goes down to my maximum allowed loss, I will get out, hit my $500 loss, and that is it. Now, I'm not saying use a $500 maximum allowed loss in your situation. It may, you may have $1 million account. 1% of that would be $10,000. You might have a $25,000 account. Maximum allowed loss would be $250. All right, so I saw the signal, which is the 520 crossover. I divided my maximum allowed loss by the value of the 2 ATR. That tells me how many shares to buy. I also placed my emergency stop exactly 2 ATRs, 4.43 below me. My end of day stop is if the 5 EMA crosses under the 20. Right now it's above, and that's why I'm staying in the trade. That'll be my end of day stop. Then the orange line up here is $3.32. That's 1.5 ATRs above my entry. If and when I get up to that point, then I will go into trailing stop mode. So this trade, just about even at the moment. I really like this. I know a lot of traders that took this trade today because of the 520 crossover, and gold's pretty bullish here. All right, so those are the two open trades. Morgan Stanley up 1.2% with the under 30 over 30, under the negative third channel. False breakout to the downside of the previous low and up 1.2%. Gold, brand new trade that I took today, 520 crossover. Now I have some daily positions that I closed last week, and this is SEN SATA Technologies. I bought this back on the 4th of April, higher low V2 in the value zone. MACD was green. This particular trade didn't work out, but I would take this trade anytime it comes along. I do believe it offers you an edge. But we had a V2. Here is day 1, here is day 2, here is day 3. Day 2 goes below day 1 by a quarter ATR. Bar 3 closes above bar 1's close, and it closed in the value zone. That was the reason for the entry. My emergency stop, 2 ATRs below here. This red line here is halfway of this bar 2. This is the washout bar. So if I get any close below halfway of the washout bar, I get out. That's my emergency stop. And I did for a 3.52% loss. So here was the entry, V2. Next day, boom, just collapsed, got out. You can see the emergency stop was down here. Didn't hit that, just got out at the end of the day. The last 3 days of trading, it went down from there as well. So it's always a nice thing to get out of your losses. It's never fun, but when they keep going down, you're like, aha, I was supposed to do that. So I did lose 3.52% here on ST. Nvidia. I was waiting for this trade for a long time. I did buy this on the 6th of April. We had an intraday rejection of the 200-day moving average. I bought it at 244.55. Emergency stop down here, trailing stop level up here. What's my end of day stop? Well, I bought it because it was an intraday rejection of the 200. Next day, closed right below for a small loss. I got in at 244.55. I got out at 242.30 for a 1.31% loss. But again, glad I got out and took my signals because today it was down 4.5%. Okay, so those are the dailies. Let's go over to the weeklies. All right, I did buy Facebook on the week back on 3/18/22 when we had a close under, close back over the 300 week moving average. We also went under 30, over 30, another great signal. We also had a V2. Here's bar 1, 2, 3, 2, washes out 1, 3 closes above, bar 1's close. Bought at 216.01. One more thing I want to mention too. Whenever I'm in a long trade and it moves up a certain amount, which is the value of 0.45 ATRs, whenever it does that, I take a percentage, 10% of whatever position I have off. You can see I have 3 green lines here. One's dotted. Here's another. Here's another. This was my first profit target for the week, and I always play offense and defense with my trades. My trailing stops, my emergency stops, my end of day stops, those are all defensive moves. Selling into strength, taking a portion off of your position into strength is what I consider offense. So I did hit one profit target up here, 233.26. So I'm glad I took some off. It has come back down. This particular trade is up, I suppose, yep, 3.31%. 1%. My end of day stop on this is going to be a close back below the 300 SMA. If it gets up to my trailing stop level, which is the orange line, then I'll go into trailing stop mode. But not too bad on Facebook. Again, end of day stop here is a close below the 300 SMA, but I'm glad the trade is up. IWM, good example of good trade management. I did buy IWM back here in January 28th, 2022. Signals were an under 30, over 30 on the weekly bar, rejected the negative third ATR channel. I bought here at 193.20, moved up. Again, whenever it moves 0.45 ATRs from the previous day's close or previous bar's close, I do get out of 10%. So I hit some profit targets here, hit some profit targets there, hit some profit targets there. And then here, last week on Friday, it went above the 50 RSI and closed below the 50 RSI. That is a bit of a red flag, and that is why I took profits off at 208.43. So I got in at 193.20, took half of the profits off at 208.43, which was a 7.11% gain. And I'm really glad I did, because it's down 4.61% this week. And that's why when I buy an under 30 over 30 and it rejects the 50 RSI or it rejects the 50 SMA, I immediately get out of half of my position. Those are overhead resistance levels that really matter. And very often, if you get a rejection of the 50 RSI, you'll head back down. So again, under 30, over 30, rejection of the negative third ATR channel. This was a couple months ago, has moved up nicely, took profits off when they were there. Portions last week went over 50, over 50, closed back under, got out of half at 208.43 for a 7.11% gain. The remaining half I have is up 2.48%. And my end of day stop here is going to be a close below the 30 RSI. All right, Disney, new trade that I took today. Why did I buy Disney? Well, see this line here? It's the 250 week moving average. Let me get ETF replay back up here again. And we'll put on here, we'll put Disney. And we're using the 250 simple weekly moving average, and we'll back test that. And you can see it back tests pretty well. 207.9%. Buy and hold 429.4, but the drawdown was much less, 40% compared to 65. So that is the reason. Sorry about that. That is the reason that I took it, because it does back test well. So intraday rejection or intra-bar rejection mean it went under the 250, back over the 250, bought here at 132.16. It's 131.90. So I bought it right at the end of the day, pretty close to break even. So first I take a look, see what is the signal? Well, the signal was that it was a intraday rejection of the 250. Then I take my, let's do the math. $50,000, 1% of that's $500. Take $500, divide it by the value of the 2 ATR on the weekly, which is 1890. Tells me to buy 26.45 shares. You're like, 26 shares? Well, it's a weekly bar, so it's going to move a lot. It has a lot more range on a week than it does on a week than it does on a day. So find my setup based upon my maximum allowed loss, divide the value of the 2 ATR in it. That tells me how many shares to buy. It also tells me where to put my emergency stop, down at 113.16. So if I have 26 shares and it moves 18.9 to the downside, there's my $500, right? I put this way outside of noise. It's very likely that it's not going to get there, but I need to have it, and my maximum loss on this would be $500. Where's my end of day stop? Well, my end of day stop is if we have a close back below this 250. You can see in the last month, not 2 months, every time we've got down to this 250-day moving average, see how we bounced and really went up? Then we came back down, it held, went back up, tested it here again, tested it here. So it's tested 1, 2, 3, 4 times, and this particular level does seem to hold, and that is why I bought it here. So I bought position size for volatility, place my emergency stop, place my trailing stop level above. If it gets up here, then I will go into trailing stop mode. But so far, so good. And we also have a double bottom and a bullish divergence here. That means here we have a low. You see the deep red MACD bars. This means that the volatility or the momentum to the downside was very strong. Then we rallied into some green MACD. Now we've come back down, gone equal to or lower with less red MACD. And so this is a double bottom bullish divergence. So nice little setup. Intra-bar rejection of the 250, double bottom bullish divergence. I'm right there at my stop. If it closes even a penny below next week, I'll get out. I've position size based upon the volatility. I know where my emergency stop is. I know if it goes up and I get to trailing stop level, what I'm going to do there. So I have a complete trading plan. And by the way, if you don't have a complete trading plan, you need to get one. I'm telling you, you need to get a complete trading plan. Most people just think, oh yeah, I just buy here and I buy there. Listen, when I enter a trade, there are so many things I have to think about. Position size for volatility. Where's my emergency stop? Where's my end of day stop? Where are my overhead resistance levels? How do I go into trailing stop mode? Right? You have to have if-then statements. If this happens, then I'm going to do that. If that happens, then I'm going to do this. So it doesn't matter if it's a day trade on the daily, monthly, weekly. It doesn't matter. You have to have a complete trading plan. And I guess I'll mention right here, I will mention it at the end of the show, but I do teach private one-on-one lessons in the evening time via Skype. So if you're interested, I know I will make you a better trader. I've been doing this for years. I've been trading for 25 years. And watching this podcast, you might go, okay, wait, the 2ATR what and this and that. I'm not really expecting you to get everything from this podcast. I'm just trying to give you an idea of how I think and how I trade. But if you do become my student, of course, I'll teach you step by step every single possible thing. So if you're interested, just send me an email. Email's on the link of this description. So that's the new trade on Disney there, the intraday rejection or the intrabar rejection of the 250. All right, last but not least, Southwest Airlines. I took Southwest Airlines on a monthly. Remember, I trade monthlies as well. I took this back here on 1/31/2022. Entry signal was a nice V2 entry. Here's bar 1, bar 2, bar 3. 2 washes out bar 1, 3 closes above bar 1's close. My stop, my end of month stop is a close below halfway of the washout bar here at 52. You can see that's really been holding as support. The next month it tested the 42, closed above. Next month tested, closed above. Next month tested, closed above. Finally got positive on the trade, but now this trade is negative because I bought it at 44.74. It's 41.72. It's down 9.96% this week, and on the trade down 8.51%. But the month is not over. Sorry about that. The month is not over, so I'm not going to make any decisions. If the month closed here, yes, I would get out immediately because it's halfway the washout bar. Down here, I have my emergency stop. Up here, I have my trailing stop level, so I have everything taken care of. But this one down 8.51%. Okay, hey, give me 1 second. Something just came up here I have to take care of. I apologize. Give me 30 seconds. Okay, sorry about that. We have a little get-together this weekend, and I have some people over, and they need my help there real quick. So, all right. So, yeah, Southwest Airlines, waiting for the end of the month before I make my decision here, but down 8.51%. All right. So, let us turn our attention to some trading psychology and or some good trading words of wisdom. You know, there's some really good Facebook, Twitter channels out there that I like to follow. I like to read. They have good trading information, good trading words of wisdom. And one of my favorite is Julian Komar. You can follow Julian at blog Julian Komar on Twitter. He's a professional trader, professional educator, really good stuff. Enjoy reading whatever he has. And let's see what Julian has to say today. The difficulty is not finding the trade entry point. The difficulty is finding the proper exit strategies. And he's referencing Rick Williams here today. It's so true, everyone. Where to buy is pretty dang easy. Where to get out, that's the tough part. And honestly, the difference between a long-term profitable trader and someone that's not, in my opinion, are how they exit the trades. The entries are pretty simple. Under 30, over 30. Okay, I get it. Under 200, over 200. Okay, I get it. Crossover, V1, V2. I get it. But what do you do to the upside, right? I mean, we know kind of what to do on the downside. We know where our emergency stop is. We know where our end of day stop is. You always want to give yourself a good risk to reward ratio. So if you're wrong small. If you're right, you can be right big. But you know, in my 25 years of trading, I spent most of my time in research on how to get out of stocks to the upside and when to get out. And that's why I use the 0.45 profit targets each day, the 3.45 profit targets each day. That's the reason I look for overhead resistance levels like the 50 RSI, 50 SMA, other significant overhead resistance levels like the 70 RSI, the third Keltner channel, losing the 5 EMA. And this is what I teach in my class, in my 101 classes, but it really is how to get out. And remember, you have to play offense and you have to play defense. Defense are your emergency stops, end of day stops, those kind of things to the downside, getting out quickly. But how do you get out to the upside? And that's why I use the offensive approach by getting out of partial profits, looking for overhead resistance levels that I know statistically probably are going to go down from there instead of up. They can still go up, right? But it's so true. The difficulty is not finding the trade entry point. The difficulty is finding the proper exit strategy. 70 RSI is a good one. Trailing stop levels where I sell half when you have a close below the previous day's low. All very important stuff, but the main takeaway on this, everyone, you have to get a complete trading plan. You have to know what to do to the downside. You also have to know what to do to the upside. So thank you very much, Julian. Appreciate that. Helpful for me to read. I hope it's helpful for everyone else as well. And you can follow Julian at blog Julian Komar over on Twitter. All right. Before we get to the charts and we start taking a look at what might be something interesting for next week, this is my friend Frank. You can follow him at FrancoD over on Twitter. Great guy, author, poet, musician, and he writes some really good trading poems. Let's see what he has to say today. Trading should be done at a minimum of cost, mapped out and configured to cut any loss. A stock not performing is really best tossed. Remember, you're not just the manager, you're also the boss. What a great poem, and so true. Yeah, you're not the manager, you're the owner of the business if you're the trader, right? Trading should be done at a minimum cost. Any business wants to minimize their costs. Mapped out and configured to cut any loss. If you're a good trader, you have a good trading business, you definitely map it out and get out quickly to cut any loss. A stock not performing is really best tossed. That's totally true. Something that's not performing, you should just get out, get on to something else. Remember, you're not the manager. You're not just the manager. You're also the boss. So take responsibility for your trading. Look for those confluences, combination of indicators lining up, good risk to reward ratios, have if-then statements, have a complete trading plan. And that's what you need, everyone. And if I can help you with that, just please let me know. You can contact me, okay? All right, so there we go. We've gone through my current positions. Last week got out of a lot of nice positions. Got out of Apple, got out of SPY. Was really grateful for that really nice run. And looks like so far got out of those trades at the right time. So again, what I'm going to do now, I am just going to go down through my watch list. I'm going to mark, take a look, and see if there's anything interesting. This was a great trade on Apple. Closed under 200, over 200, rode it all the way up. Bought it there at about 154.99, sold it up here 174.18 with a close below the 5 EMA. That was my signal. Bounced up, and then we've come back down ever since. What am I waiting for on Apple? Well, we are back in the value zone. This could be a return to value V1 or V2. If you'd like to know more about V1s, V2, in my YouTube channel, in the lessons playlist, I have a complete playlist there and video that talks about V1s, V2s. Essentially, you want to be above value, come into the value zone, go sideways for a while, show that you have there's some buyers there and there's some equilibrium, look for a V1 or V2 trigger. I'm not going to explain that all here, but you can watch it on my YouTube channel in the V1 and V2s. Right off the top of my head, looking for something to do on Apple here. 200-day moving average, of course, I would buy it again there in a second, but it's a little bit away from that. We also have a 520 crossover that's still in place. If it crossed under and then crossed back over, that might be another approach, but I don't see anything on Apple for next week. Adobe, I do not see anything on Adobe for next week as well. AGQ, well, AGQ, valid right here. We had an intraday rejection to the 200, another test of the 200 again today. I already have gold, so I don't want to have too many correlated positions, so I really don't see anything here on AGQ today. Advanced micro devices, well. Advanced micro devices, semiconductors really got hit. I mean, look at this huge run up and then just this straight down move. My gosh, we're at a 37.57. Next week, I will mark this one. If AMD can go under 30, over 30, I would buy it there. If it could also close above the 300 SMA, I would buy it there as well. So not sure if either of those are going to happen, but that is what I'm looking at. Amazon did not like the 200-day moving average. I wouldn't buy it up here anyway. It's too far. I don't really see anything on Amazon here that interests me for next week. ARC Innovations above the value zone, back in the value zone, actually lost the value zone. I do not see anything that even looks remotely interesting to me next week on ARC. Boeing, yeah, let's mark Boeing. We're at 3609 RSI. Next week, if we could go under 30, over 30 at whatever point, I would buy Boeing, so I will mark Boeing there. Alibaba, do not see anything on Alibaba that's interesting. Berkshire Hathaway had a nice V2 yesterday and then really jumped right up here, but don't see anything on Berkshire that interests me for next week. Here's Bitcoin. Well, we had quite the run in Bitcoin, moved all the way back down. Don't really see anything on Bitcoin that's interesting to me for next week. Budweiser, Anheuser-Busch, rejected the 200-day moving average up there as resistance. Don't see anything there as well. Beyond Meat, everything looks the same, doesn't it? Up and down. Do not see anything on Beyond Meat. Caterpillar, I would buy Caterpillar if we got to the 200-day moving average. It's still quite a ways away. There's the 300 SMA right here. Let's back test that while we have a chance. So that's Caterpillar on the daily with the 300-day moving average. Let's back test that, see if it back tests positively. It does, 522.6%. And the 300-day moving average is within striking distance next week here at 210. So I will mark Caterpillar. If I got an intraday rejection, close under, close back over, that's what would interest me for Caterpillar. Cameco, very, very strong here. No signal for next week that I can see. Carnival Cruise Line, don't see anything there either. DoorDash, a lot of things coming back into the value zone. If I could get this sideways motion, V1, V2, but it's hard to say if that's really going to trigger, so I'm not going to mark that. The Dow, DIA, well, I don't really see anything here. We could get back over the 200-day moving average. It's a little high for me, but it doesn't really stick out as something. Although here's the 300. Let's backtest Dow on the 300 and see if there's anything there that works. Yeah, it backtests well. It backtests positively. So if you can see it already held the last couple days. It backtested the 300, went up. Backtested the 300 SMA, went up, went up. So I will mark DIA if we come back and we can test the 300 again. Disney, well, I bought that today, of course, on the weekly with an intra-week rejection of the 250, but on the daily, I don't really see anything. DocuSign coming back into the value zone. Great, but I don't see any striking signal for next week. Etsy. No, I don't see anything on Etsy either. Facebook. Of course, I have Facebook already on the weekly. It's been very, very strong coming into the value zone, but as for a daily trade for a daily swing trade for next week, I don't see anything. FCX, nice in the value zone, holding some support, but I don't see a trigger for next week. Fiverr, same with Fiverr, don't see anything here either. Gold, of course, I did buy gold today with a nice 520 crossover in the value zone and the sideways motion. Back test well using the 520 EMA. Hey, hope we can go back to test this high. That would be fantastic. But so that was the new trade today. GNRC, hot sloppy mess on the way down. Nothing clear on GNRC. Google, well, look, here's the 250 SMA. Today we lost it. So I definitely will mark Google because there's two locations that I'd like to buy Google here. If next week we could close over the 250-day SMA, that would be an entry signal. If we came back down, kept going lower, got to the 300 SMA, the orange line here, that would also be my signal. So that's what I was talking about, that we either have to go higher or lower. If this were to go higher and close above the 250, that would be a legitimate entry point using the 250 as your end of day stop. Or if we got down to the 300 and got a rejection of that, I would buy it there. You can see in the past, every time we've gotten near the 300, we've bounced, we've bounced, we've bounced, we've bounced. Will it happen again? I don't know, but I think it's more likely than not. So it's not quite there yet, but two different things here on Google. Either a close over the 250 would be great, or a bounce at the 300 with a good risk to reward ratio. Goldman Sachs, big day up today. Earnings next week, so probably avoid that until earnings are over. Home Depot, almost bought that yesterday. Would have been a good buy. Nice undercut. There's a V1 undercut of the previous low. Now it's moved up. Now it's chasey. I consider it chasey or too far extended for me to get interested in. Now I could look for a higher low V1 or V2, meaning we come into the value zone, pull back, look for a higher low V1, V2, but that has not happened yet. So nothing on Home Depot. IBB, up strong, but nothing for next week. INDA, major moving average, 200-day moving average up here, but it's already to the third Keltner channel. I would imagine this would probably come down. No clear signal for me there. Intel, just straight up and straight down. Don't see anything on Intel for next week. Russell 2000, of course, I'm already in that trade. We already discussed that, but on the daily, I don't see anything. Johnson & Johnson, boy, look at that nice move off the 200 and just trended up here. Johnson & Johnson, yeah, I'd buy it if we got back down here to the 200, but that's a long way away. I don't see that as likely. JO, which is coffee, ETF coffee, don't see anything here. Carmax, well, we have earnings coming up next week, so it kind of messes everything up. That's been real choppy and sloppy. I don't see anything there either. Coca-Cola, what a huge, I mean, look at this huge crash down and huge move up. Unreal. Nothing on Coca-Cola. Lockheed Martin, nice big rally, reversal today. Don't see anything on Lockheed Martin. Southwest Airlines, of course, I already have that on the monthly trade. That one's down 8.51%. Lyft, do not see anything on Lyft. MasterCard, look, we could get above the 200-day moving average, right? Today we rejected it to the upside, but could get the 200-day moving average. So I will mark that with a close over the 200. McDonald's, right off the bottom, straight back up, pull back to the 200-day moving average. Would be interesting. It held last time, so I'll mark that. Merck, just straight to the moon. Congratulations to my friend Mike, aka Leva. Bought this over the 200. Had a great risk reward ratio. Look at that move. Way to go, Mike, but nothing there now. Morgan Stanley, I'm already in that trade. Bought that yesterday with the under 30 over 30 rejection of the negative third ATR channel and false breakdown from the previous low and reverse up 1.2%. So that one's all good to go, but nothing new. Microsoft, I would be interested in buying Microsoft either with a rejection of the 250 or the 300 next week. So I will mark that one, and that one back tests well as well. Netflix, don't see anything there. Nike, don't see anything there. Nvidia, okay, well I can get out of Nvidia. But look, we have the 250. Let me get rid of all this stuff right here. Oh, I need to keep that. Yeah, that's right. So Nvidia, I'll be looking if we go lower for a bounce of the 250 or the 300. Last time the 250 held well, and that's where it moved from. We're almost back down there. So I will mark Nvidia with a rejection of the 250-day or a close under 250, over 250, or a rejection of the 300. Yeah, going through this makes me, glad for the little bit of a pullback here because, buying something like AMD or Nvidia or Google at the 200, 250 is a pretty good opportunity. Doesn't happen very often. Pfizer, really strong, nothing on Pfizer. PKI, I don't see anything on PKI. Almost bought PKI here with this rejection of the 300. I wish I would have. It turned up nicely, but can't get them all. PLTR, I don't see anything here. Philip Morris, boy, just moved up. I bought Philip Morris here with the close over the 300, and then it closed under. I followed my rules and got out, and then look what happened. Straight up. That's how it goes, but I don't see anything on Philip Morris right now. PayPal, don't see anything there. Qs, getting above the 300-day moving average on the Qs might be interesting. 300's at 355.91. We're at 349.15. So if we could get back over that 300 while it's in the value zone there, I could use that as a level. So I will mark that one in case we have a rally for next week. Rio Tinto, my trading partner and good friend Ava, bought this with a rejection of the 200. Look at this beautiful trade she had. Way to go, Ava. Proud of you. Way too far extended for me for new trades, so nothing there. Shopify has just gone down, down, down. Don't see any major levels there that are close, so I'll skip. SIVB, no. Silver, 520 crossover could be interesting. Not there yet, but it does backtest well, so Snapchat, I don't see anything there. Virgin Galactic, don't see anything there either. S&P 500, with a close over the 200-day moving average, that would be legitimate, or the 250. So this is an example of having to go up or go up higher or down lower before I take action. Close over the 200, yes, that would be interesting to me. If it went lower and held a 250, would that be interesting? Yes, it would. 300-day SMA down here, Yes, it would. So I definitely will mark SPY for a close over the 200, a rejection of the 250, or rejection of the 300. Teladoc, I don't see anything there. Teradyne, I don't see anything there either. Bonds, look at bonds. Of course, bond prices go down, yields go up. I think this would have been a legitimate buy today on TLT. I believe we went, see it right now, it's 3154 RSI, and we're well off the low. So if we go down to the low of the day, we bounced at 3011. You know, people say, oh, RSI doesn't work. Well, it doesn't work all the time, but it works more than it doesn't. And so I will mark TLT if we could get another under 30, over 30. It did reject the negative third ATR channel here as well, but I only take one trade per day. Or on one time frame, and of course I bought Disney, and then what else did I buy? I bought gold and Disney today, so I didn't want to take too many positions, but I will look for TLT if we could get an under 30, another under 30, over 30. That would be interesting to me. And we have a double bottom bullish divergence. Here's the low with the deep red MACD bars. We rally to green, we come back equal to this low or lower, which it certainly is now. These bars down are less deep than these, showing that there's a reduction in downward momentum. And the implication of that is that it would bounce. You still need a trigger, but that was a legitimate entry today. I just didn't take it. If I could get another one next week, under 30, over 30, I would take it. Tesla, yeah, I'd buy Tesla down to the 200-day moving average, but that's a long ways away, so I'm not going to mark that. Twitter had a huge day. Last week had the big move up with Elon Musk buying part of Twitter. Would I buy it here? No, I wouldn't. There's really nothing interesting for me. We did lose the low of the gap up day. That's a bit of a bearish sign. Unity Software, no. United Airlines, I don't see anything there either. Natural gas, it's just gone up crazy, but not a good entry in my opinion there. UNH, boy, healthcare stock's just doing really well. Not going to buy it up there. It's at 73.41. Oil, kind of all over the place. Don't see anything there. The dollar is looking quite bearish to me. And you say, Greg, it's up. It is up, but we have a lot of bearish things going on here. We have a high with high MACD bars. We pull back to red. We've gone higher now and very little green. This is called the double top with a bearish divergence. There's all sorts of divergences here. That we're higher now than we were over here, but our MACD is lower. That's showing that we're running out of buying pressure. Up here, we were at the 7th ATR channel. Now we're higher. We're only at the 3rd. So there's the divergence there. RSI is also diverged. Here we have a high. Look how high the RSI was here. Now we're higher. RSI is down here. This is a very bearish chart in my opinion, but you just need some type of trigger to get you into it. Divergences really don't matter until they matter, and you need something to trigger or pop the pin and let the market come down. But this is primed to come down, but there's no legitimate entry signal. But I will mark UUP in case we get some kind of nice rejection of the 70 RSI or a V1 to the downside, something like that. But this has a lot of potential for the downside, but just hasn't happened yet. VIX, well, nice little V1 close over the 200-day moving average. Going to pass on that. Verizon, huge move up on Verizon here, but I don't see anything. Walgreens. Don't see anything here either. Walmart, look at Walmart, just strong, really strong, likable. 78, 75 RSI. Wow, a lot of money going into these kind of safety dividend stocks, but I don't see anything for a trade next week. XLE, big strong day up today. Don't see anything there. Financial sector. Well, financials could have been bought yesterday with the rejection of the 300-day moving average. I didn't do it because I bought Morgan Stanley. I don't want to have correlated positions. I will mark XLF. If we can come back test that 300-day moving average, that would be a good entry point again. Real estate, been very, very strong. Too high for me to get involved. XLU, wow. That's all I have to say. Nothing there. Healthcare, wow. Nothing there. ExxonMobil, I don't see anything there, and Zoom, nothing there as well. So let's go back up here to my flag symbols and we'll just do a quick review. AMD for next week. I would be interested in AMD if one of two things happened. One, we either go under 30, over 30. That would be one entry point if it goes down. If it can close above the 300-day moving average, I'd be interested in buying it there. So that's my plan on AMD for next week. Boeing, if we could go under 30, over 30, I would enter a position in Boeing. Caterpillar, if we were to come back down, have a nice pullback to the 200-day moving average, and we had a rejection there, I would buy there. Dow Jones Industrial, if we could come back test the 300 SMA with the good risk to reward ratio, that would be good. I wouldn't buy it over the 200. It's a little too high. I'd like it to go down, give me a good risk to reward ratio of the 300. Google, I like very much. It has to either go down or up. If it goes down, rejects the 300, that would be my spot to pick there. Alternatively, if we close back above the 250-day moving average, I would also get long there. So it either has to go lower and reject the 300, or it has to go higher and close above the 250. MasterCard, if we closed above the 200-day moving average, gave me a good risk to reward ratio, I would buy it. So that's what I'm looking for on MasterCard. McDonald's, if we get a pullback and hold and close above the 200-day with a good risk to reward, that would be my entry point on McDonald's next week. Microsoft, love Microsoft, would love to buy it here if we reject the 250, which is a bit lower, about 293, so about $3-4 lower. If I could get an intraday rejection, close under, close over the 250, that would be one location. Or ideally, I'd like to buy Microsoft at the 300-day moving average. So those are the two spots for Microsoft. Intraday rejection of the 250 or intraday rejection of the 300. Nvidia, if we could reject the 250-day moving average, that would be spectacular. If we could reject the 300-day moving average, that would be double spectacular. Or if we could close back above the 200, that would also be a legitimate entry. So it either needs to close above the 200, reject the 250, or reject the 300. Of course, I would like to reject the 300. Qs, if we could close above the 300-day moving average, use that as our end-of-day stop, that would be good. Silver, looking for a 520 crossover for next week. SPY, if we could close over the 200, I would take a position there. Or if we could go lower, test the 250, I'd take a position there. Or lower, test the 300, I would take a position there. Bonds, TLT, if we could go under 30, over 30 again, that would be interesting for me next week. UUP has one of the most bearish charts from a divergence standpoint. I would just need a legitimate short on this, like a loss of the 70 RSI or a V1 or a lower high. A little bit more advanced trade here, but with one of my students last week, David, I was saying, boy, this is one of the most bearish charts I've ever seen. Bearish MACD, bearish RSI, bearish ATR channel, all sorts of bearish stuff going on here. And then last but not least, XLF. If I could get another retest of the 300 on XLF, those would be my entries. That would be my entry on that one. So that's what I'm looking at for next week. Hopefully that helps. Just wanted to mention before I go, if you're interested in becoming a better trader, I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I'm good at it. I teach a great course. The course is 15 hours, 5 sessions. Each session is 3 hours, just you and I. And it's a pretty tough course, actually. I mean, it's pretty intense because it's 3 hours every time. We do it 5 times. That's where you get the 15 hours. It costs $1,750, but I promise you it's worth every penny. But I've taught people from all over the world. I use 5 different trading approaches. I teach you step by step exactly how to trade like I do. I've been doing this for a long time. I know you'll be a better trader. It's very important to me that my students succeed. Extremely important to me. It really is. I want to see my students succeed. So in the lessons, I ask a lot of questions. I throw a lot of curveballs. We do a lot of simulation trades. I put you in the driver's seat. Okay, David, tell me what to do. Are we in? We out? How come? Why? I really want to make sure that you understand and the trading approaches and know how to trade correctly before I let you go as a student. So if you're interested, usually the best way to start the process, just send me an email. The email is in the link of this YouTube video, and just say, hey Greg, potentially interested in taking your course. I'll say, great, sounds good. Thanks for reaching out. Let's set up a Skype call. Skype call is free, everyone. It's not a sales call. I promise you, I will never sell you. I promise I will never say, well, hey, do you want to take the course? No, I don't do that. I just want to learn more about you, your trading challenges, your goals. And then that Skype call is a really good time for you to ask me any specific questions about the course. And then when we're done with the call, you think about it as long as you want. I don't care if it's a year. And then if one day, if you decide, hey, today's the day that I want to be a better trader, I'm going to contact Greg. I'm going to set up these lessons. Just do it. Email me back. Say, okay, I want to do it. We'll set up a time. We'll set up a date, and off we'll go. We'll go. And I promise you, you'll be glad that you did. Almost every single student I've ever had said, man, Greg, I'm so glad I took this course. It's really, really helped. All right, that's number one. Number two, if you like online courses, I have a great online course available at udemy.com. The link is also available in the description of this YouTube video. I teach you in that course how to trade the deep dip buy stock trading strategy. And that's the strategy where we nailed the SPY, we nailed Apple. It's a great strategy and it's a great course. And the best thing is it only costs like $12 or $15 on udemy.com. But don't let the low price fool you. It has so much content. It has 9.5 hours of video, it has 26 total videos, it has 15 study guides, and I teach you step by step exactly how to position size, where your entries at, where your emergency stops at, where your end of day stops are, where your overhead resistance levels are, what to do with your trailing stops. It's a great course. I've had so many reviews, so many good reviews, so much good feedback. So if you're not doing anything this weekend, watch the course. I promise you, it's not as good as the one-on-one course, right? It's not, but for what you get for 12 or 15 bucks, it's a lot. So the link's in the description. And then lastly, if you like today's podcast, if this has been helpful for you at all, I would just ask that you would hit the thumbs up button before you click on out of here and get on with your weekend. It really helps the channel, lets YouTube know that there's some valuable content here, and so they can get it out to more people. And I've had a lot of feedback on this new format, and it looks like it is helping people, and I'm very, very grateful for that. So if you wouldn't mind, sharing it on social media or at least hitting the thumbs up button, I would really, really appreciate that. So it's the weekend. I have some friends in town. Looking forward to that. Should be interesting. That's why I'm doing the podcast here on Friday night instead of Saturday. But I appreciate you spending your time. I hope you have a great weekend. I hope you have some fun. I hope you study your charts, maybe read a good trading book or two, get some exercise, do a little meditation, do some presence work. But above all, just be kind and nice to everyone that you meet. I always say this at the end of every podcast, but if you could please go out, try to do one nice thing for another human today. It really would help the world become a better place if we all did one nice thing for another human being today. And it would also be twice as good if you could go out, try to do something nice for an animal as well. I was raised with many animals. I know they appreciate acts of kindness just like humans do. And so if you could do one nice thing for a human, one nice thing for an animal, I promise you it will come back to you tenfold. And hopefully one day when you need it, someone will be there to give you the act of kindness as well. So if you have any questions, feel free to email me, leave a comment below, hit the thumbs up button. But most importantly, be careful with your trading. Look for those confluences, look for those setups, look for good risk to reward ratios, position size based upon volatility. Follow your plan, please. Follow your plan. Don't let your emotions get you revved up. That's where a lot of people get into problems. So if there's anything I can do to help you, please let me know. And be good, be safe, drive safe, and have a wonderful weekend. And good luck on your trading next week. And hope you enjoy this podcast. Thanks again. And on the way out, I have to run the U.S. legal disclaimer. Take care, everyone. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.